Good Friday morning from Yahoo Finance's New York City headquarters studios. I'm Yahoo Finance Executive Editor Brian Sozzi. The money-making bells are ringing. You hear it. And all eyes are on the first trades for Amazon and Apple. In all the derivative tech trades, Amazon getting solid marks by the street for its quarter, notably improved growth from the AWS cloud business. Apple flexed by offering upbeat holiday quarter guidance because of a strong iPhone 17 upgrade cycle. It even teased a long-awaited Siri overhaul next year. That is long overdue. Nobody uses Siri. Let's get down to NASDAQ and check in with our very own Brooke DePalma. Brooke?
Good morning, Brian, and happy Halloween to you here from Times Square. Certainly what we're seeing is some momentum this morning. Right now, we have the NASDAQ leading the momentum after that beat from Apple and Amazon. The NASDAQ up nearly 1.5% to kick off today's trading session. Taking a look at the S&P 500, also holding on to some momentum there. That index is up about 0.6%, up about 46 points. And we also have the Dow just ever so slightly higher, up nearly 0.2% at the open. But I want to go right to the NASDAQ because we're seeing lots of green there, with Amazon really leading the charge there after the company reported better than expected earnings. It also saw a pretty close in line revenue when it comes to that key AWS business. And in addition to that, there's lots of optimism after the company had let go about 14,000 employees earlier this week, that the company can now sort of reallocate and use that money to really reinvest within this AI cycle. Also want to take a look at Apple because based upon strong iPhone 17 demand, that stock also moving higher, up about 1%. And they're looking at a key December that might be the best that we've seen for the company. And so that's really keying some momentum as well. We have Nvidia also higher this morning, as well as Tesla and Google as well. Also taking a look at the Dow, we are seeing some downward momentum there. J&J as well as Merck, Amgen, some of the losers here this morning, and that's why we're seeing the Dow maybe not see as much of a gain as the NASDAQ. Back to you, Brian.
Boo, downward momentum on a Friday, Brooke, just boo. All right, we'll catch up with you in a second. Understanding earnings for big tech companies is getting increasingly complex as billions are spent on fancy new AI technologies with bizarre sounding names. A great example of the complexity is this. Here's what Microsoft CEO Satya Nadella said on the top of his earnings release this week. Quote, "Our planet-scale cloud and AI factory, together with co-pilots across high-value domains, is driving broad diffusion and real-world impact." Look, Satya is a world-class leader, mad respect for him, but I barely knew what the hell he was talking about there, and I am not exactly a dummy, people. The complexity in tech earnings this week carried over to results from Amazon and Apple last night. Amazon CEO Andy Jassy hyping an AI chip it calls Tranium, whatever that is. Apple CEO Tim Cook waxing poetic about neural accelerators. The bottom line here is that at the end of the day with tech, all that matters are growth rates and executive tone about those growth rates. Apple signaled a big holiday quarter because of strong iPhone demand.
For complete transparency and clarity, we're constrained today on several models of the iPhone 17. There's not a ramp issue. It's just we have very strong demand. And we're working very hard to fulfill all the orders that we have.
Tim Cook sounding very excited there. Meantime, Amazon delivered upside on AWS cloud sales and signaled demand was going to stay brisk.
Turning to our cash CapEx, which was $34.2 billion in Q3. We've now spent $89.9 billion so far this year. This primarily relates to AWS as we invest to support demand for AI and core services.
Andy, a little livelier than Tim. Both these companies checked the bullish boxes they needed, joining NVIDIA and Alphabet as being the tech standouts of the week. The news from this trio inspired me to dress up as a tech office worker for Halloween today. Vest, jeans, sporty sneakers, and a big obnoxious watch. Here in the opening bid roundtable, Ritholtz Wealth Management Chief Market Strategist Callie Cox and Yahoo Finance Senior Reporters Brooke DePalma and Inez Ferre. Callie, coming to you out of the box. As always when you're on here, Apple, did you like that quarter?
For Apple, I did. And what I mean by that is, Apple beat revenue expectations while missing in its two biggest markets, the US and China. That, I think, was surprising to all of Wall Street. Apple has had a little bit of a rough year, especially with the tariff headlines and the fact that a lot of its manufacturing, like many companies, is overseas. But Apple's biggest struggle here is the lack of clarity around its AI plans. That's what the market keeps hitting it on. That, and of course tariff developments, but tariff developments seem to be heading into the back burner, given all the clarity that we've gotten around that. So Apple's quarter was fine, but I think it's still missing out on that key data point that investors really want.
And as you have quickly become my forward-looking indicator, putting your kid on a potentially driverless car to go to karate, have you gotten a new iPhone? Because I think it may say a lot about how this Apple quarter is going to shape up for the holidays.
I haven't yet, but keep in mind, this is my work iPhone. So I do plan to ask work for a new iPhone because it's been about 4 years, maybe 3, since this one has been upgraded.
Ask them. It's free, Inez. It's free. Ask corporate. Come on.
I know. I always feel bad asking about these things, but yes, I definitely want this new iPhone because it has so many features to it. Look. The fact that their iPhone demand is so strong heading into the holiday season, I mean, this has been a real, they've been firing on all cylinders, not just with the iPhones, but also with wearables, with enterprise, Siri making progress, teasing it for next year. I mean, there's a reason why the street is bullish on the stock, despite the fact that, it lagged earlier this year because it wasn't part of the AI sort of theme, but nonetheless, they're back to the basics and they are back to the fact that their iPhone is having such strong demand. This lineup is so huge for them.
All right, Inez, I encourage you to get that free upgrade. Brooke, you know what amazes me this week? I was reading your story on Chipotle. 25 to 34-year-olds, according to CEO Scott Boatwright, not buying big burritos and big bowls from Chipotle, yet they're spending thousands of dollars on new iPhones and various other equipment.
Brian, this is clearly a consumer environment where consumers are extremely choiceful. Even Starbucks CEO Brian Niccol, he said that on his call with investors earlier this week, and they're clearly picking and choosing where exactly they want to spend here. Clearly with this iPhone, which is important to note here, that makes up the most revenue for Apple. Consumers are seeking it out. They're willing to splurge. They're willing to spend, but they're not willing to spend on just about everything. And I've been getting so much feedback from that story that I wrote about Chipotle, young consumers pulling back there, and many people commenting that they're going elsewhere, even maybe a Cava instead. And so it'll be interesting to watch their report out next week.
Callie, back to you. Amazon's quarter, getting some high marks because of an accelerated growth rate in AWS. Is AWS just the real driver here? I mean, Amazon has such vast operations. Of course, they have retail operations. They've gotten big into advertising. But that stock is going to probably work if AWS is working right.
Yeah, you're right. Amazon is a behemoth of sorts. It seems like it owns or has its hands in a lot of cookie jars of businesses at the moment. But I think AWS is the key to Amazon's growth story over the next few years. And this goes back to AI. AWS, of course, the cloud services that Amazon has, the growth rate coming out of last quarter was incredibly impressive. We heard some positive comments around that. And what struck me is the fact that a lot of analysts on the street are connecting this to the AI trade flowing through to business results, which is what you want to see when you have these tech companies spending hundreds of $billions on trying to make AI stick to the wall.
Callie, who won the battle of the Mag 7 earnings this week? As we can zoom out, we finally got all these reports. Really, what report really made you sit up and said, wow, that was a good quarter, and you know what, all this AI bullishness, it's definitely justified?
I think it was Amazon, to be honest. I think it was Amazon through that proof point of AWS. I think what struck me more, Brian, is the division we saw around investor reactions and details that we got from these company executives around AI. Of course, all of them talked about spending. That's a detail that you can't really hide from these days because all of these companies are just spending so much money on figuring out what its next steps are with AI. But the investor reactions were a lot different. Meta got slammed because of a lack of clarity around AI and what AI could look like. Definitely a lack of proof points and business results. Microsoft, I thought, was a little funny. I don't think that they reported such a bad quarter, but I think some of the details were a little hard to process for investors against this backdrop of big spending. So the AI trade is dividing. I find that interesting, and I think that that's going to be an important theme to watch in the months to come.
And as lost in the sauce a little bit on Amazon is what Andy Jassy was saying on robots. I put that post out on X this morning. They're all in on robots. I think he noted they have 1 million various robots working in their operations right now.
That's what stuck out to me also in that earnings call that you noted. And I also noted that as well. Over 1 million in their fulfillment centers. And also, he said that they've got more inventions in flight, and that there's going to be more of these. So this is where the future is headed for them. And the fact that he put that number out there, that you think to yourself, wow, over 1 million robots already in their fulfillment centers, and they're even going to do more. I mean, this is going to be fully automated at some point. With Amazon, I thought that was striking. Of course, the AWS reacceleration also, but they're just their retail, their e-commerce, the AI tools that they're using for some of the product descriptions, they really fired out all cylinders.
And Inez, of course, that's AI is not the reason they laid off 14,000 workers. Of course, it's not.
Yeah, I know. It will always be very hard to tell, really, when these companies announce this. I mean, yes, that he said he alluded to that. That's not there yet, but it's hard to tell. I mean, it's hard to be able to pinpoint that.
Brooke, one last thing that stood out to me from Amazon is the big push they're making into groceries, especially fresh groceries.
Yeah, Amazon essentially looking to compete with Walmart now. We know that Walmart's U.S. sales, about 60% of them are grocery. And what we've seen over the past few years, especially since that acquisition of Whole Foods back in 2017, it took a while for Amazon to really figure out how to integrate that business with the Amazon e-commerce business that already exists. And now certainly over the past few months, we've seen that doubling down, that day of perishable delivery on, everyday grocery goods. And that's a business that certainly I have my eye on as well, especially in this environment where consumers are really seeking out convenience when their dollars are a bit tight.
Callie, I also am watching this Netflix 10-for-1 stock split. Are you a big fan of stock splits?
I think they're interesting in this market environment because they bring in a lot of the retail investors that have started investing over the past few years. Look, it's not surprising that Netflix is splitting its stock here. It's a $1,000 per share stock. Fractional shares exist. I think it's a little outdated to do a stock split, but it brings the attention back to the stock that's announcing the split. Of course, Netflix, everybody knows Netflix. So it's going to be on a lot of retail investors' radars. And it drums up interest in, those investors who do see the stock price as a reflection of value. I don't see it that way, but I understand why stock splits do bring in that type of interest and why, big popular companies do pursue them after long, successful runs. I mean, this is a good thing for Netflix.
We, of course, love to have fun here on Opening Bid. As I mentioned at the top of the show, I'm dressed up as a tech worker. Inez, I think you have a little bit of a Halloween unveil.
Yes, I do. Give me 1 second as I just put this unveil on, guys.
I mean, this is the drama we need on business TV.
This is.
Who are you?
I am Lisa Su.
Lisa Su, AMD, Jensen Wong, step aside. We got Lisa Su on set.
Yeah, you guys should give me a prep to do this. Let me see. Yeah.
Oh, no, this is way better than getting the prep. We got Dr. Lisa Su. Big year for Dr. Lisa Su at AMD. Wow, love it. Brooke,
yes.
I see you with the shades on. Maybe you're a tech worker too?
No, clearly, it's 1999, Brian, and this is the launch of The Matrix, and right now we're just ahead of what could be the next dot-com bubble, and so we're really centering back. We're looking to take it back to the late 90s this morning. I got my leather jacket on as well, and put that on quickly. And we're really we're getting after it this morning. The year is 1999.
I got The Matrix.
March.
I got Dr. Lisa Su fixing her hair. Callie, let me guess, you're a financial manager.
A shareholder.
Who are you?
I'm a shareholder.
Shareholder.
I'm lacking
Can't
in the wigs
make
and
this.
glasses department. So
I can't say what I want to say.
We're going simple but clever.
You can't make that is awesome.
Very
Callie,
clever.
you are awesome. Dr. Lisa Su, you are awesome. Matrix person, you are absolutely awesome. You're all awesome. Happy Halloween.
My AI chip,
Ain't topping this. We'll be right back here on Opening Bid.
Happy
Y'all
Halloween.
rock. Y'all rock. All right, the New York City Marathon will see thousands of running fans take to the street on Sunday in a bid to test their physical and mental endurance, and best believe a good number of them will be wearing shoes from Berkshire Hathaway-owned Brooks Running. How can I tell? The company's third quarter earnings were very strong. Brooks achieved its 9th consecutive quarter of year-over-year growth, increasing sales by 17% in the third quarter as all regions and channels delivered double-digit gains. Brooks Running CEO Dan Sheridan joins me on set. Dan, good to see you as always.
Hey, Brian. Thanks for having me.
Are you running in this thing?
I am not. No, I'll be a fan cheering everybody on this weekend.
Okay, so talk to me. You got some samples on set. One of them I know well because I actually use it in my own training. But what is the new innovations that you're bringing to market that those wearing them in the race are using?
Yeah, well, you mentioned our results, and it's coming out of innovation in the run space. Our process in R&D is specifically on how do we improve the experience of the run for runners. So what we have here today is the Hyperion family. This is the Hyperion Elite, a 7-ounce shoe.
Well, I'm elite, that's why.
That's right, that's right. Which will be out on course over the weekend on many runners, and this is the Hyperion Max. So what we're doing is we're balancing the midsole engineering foam compound with carbon plates, and we're increasing performance for runners.
How much higher or much more cushion could the soles get? I've seen some, some of these are like, they're like this, man.
Yeah, so what's happening in our space right now is the material engineering is just accelerating at a rate where, I think what you're gonna see is the heights are gonna kind of minimize here because you don't have to put as much foam underfoot because the engineering of the foam is so good. It can dampen and give you cushion and give you resiliency and energy on your run.
What's your big innovative bet for next year?
Yeah, well, it's definitely in performance categories. So this is a good example, but we're also pushing into trail as well, and a lot of innovation in trail. And then daily trainers. Again, the midsole compounds are just incredible now. So you can get multiple factors out of it. You can dampen and cushion and still get resiliency and energy. And so we're working that puzzle, and we do every single day at Brooks.
Why trail?
Why trail? Trail's one of the fastest growing categories globally right now. We think it's a bit of a push off from the COVID era when people wanted to be out in the outdoors and in the space. And so light hiking, road to trail, and then top of the mountain. UTMB is an ultra marathon in the French Alps. And
you doing that one?
No, God, not me. But we had top 10 athletes in UTMB. So Brooks is on the road and on the trail, and it's driving our results, 17% year to date.
Last time we talked was actually for my opening bid Unfiltered podcast, maybe 5 or 6 months ago. It was the height of the tariff hysteria. Now that we're somewhat behind that, tariffs still in play, how much of your costs gone up because of these tariffs?
Yeah, so it was a puzzle, right? A math problem for us as we came into the summer, and now we feel like it's predictive in terms of the trade policies. We will see about a 2 to 3% price increase in 2026. The tariffs are just now starting to roll in to our cost of goods, but we really tried to take a full supply chain approach to this. We didn't want to punish the consumer, and so we were thoughtful and intentional in price increases, but we'll have a slight price increases on our products next year.
That doesn't sound like very much. How have you been able to only raise prices 2 to 3% when tariffs are double digits?
Yeah, it really is. We've worked with all of our partners all the way back to our manufacturing final make through transportation and distribution to make sure that one of the things we didn't want to do was punish consumers. If we dampen demand and slow momentum for our products, that's a bad scenario. So we were really intentional on making sure price increases didn't punish the consumer.
Help me understand this. We've been talking all week long about a company like Chipotle calling out sales pressure from 25 to 34-year-olds. Yet your third quarter sales up double digits, 17%. Why do you think that disparity?
Yeah, well, it starts with participation in the sport. It's at an all-time high. New York City Marathon had 200,000 people that wanted to get into the race. 55,000 are going to run. London Marathon, 850,000 people tried to get into London. 60,000 people are running. So participation's at a level that is driving our category. And then people are paying for performance products to improve their experience on the run. Average retail price in the US is up 40% in the last 5 years. So people are investing in their health and wellness.
One of your competitors a week ago came out with some glossy photos of new sneakers they were working on. One of them that caught my attention because I thought it was ridiculous. It was like a motorized sneaker that is supposed to help you walk faster. Is that the future? Do I want to see something that looks like a leg brace stuck atop a Brooks sneaker?
You know, I think we may take a different approach to this. We want to empower your journey in fitness. And so we try to innovate for real innovation in product. We do deep research on biomechanics of human motion. We do runner insights to understand what you want and need on your run. And so everything that we put out in our product category is real innovation.
Like, is that
for real
gimmicky?
runners.
Is that stuff gimmicky?
All I know is what our approach is, and that approach is we're going to do real innovation that improves, reduces injury, increases performance for you, and that's our point of view, and we think it's the right point of view, and it's been consistent over a 25-year period. We've had 14% compounded annual growth rate for 25 years at Brooks. It works.
And one constant over those 25 years has been Warren Buffett. I mentioned at the top of the show that you are Berkshire owned. We've talked about it a lot. The Journal, Wall Street Journal, reporting that Mr. Buffett is going to now be, as he steps aside in the fourth quarter, he won't have his, he's passing the baton on his annual letter. He won't be on stage at the next annual meeting. He'll be within the crowd. What do you think about this passing of the torch, and what does it mean to Brooks?
Well, I think Warren Buffett's the GOAT of capitalism. I mean, is there anybody that's done it better? And how fortunate are we as a brand to be owned by Berkshire Hathaway? There's so much guidance and wisdom that we've had from Warren over the years, and now Greg is stepping into this role, and I couldn't be more happy to be supported by Berkshire. And I always say I've got the greatest job in the industry because of our ownership structure.
Yeah, it's been fascinating to follow both of your journeys, Dan. Good to see you. Let's see you in that New York City Marathon next year. Come on.
I would love it.
All right,
Thanks,
good
Brian.
stuff, Dan. Good to see you as always. All right, yearning for more opening bid? I have you covered. This Saturday morning on my Opening Bid Unfiltered podcast, a new episode with the former longtime CEO of Royal Caribbean, Richard Fain. I've known Richard for more than a decade, and I can tell you this: he is almost single-handedly responsible for creating some of the world's largest cruise ships. You will not want to miss this episode where we talk about the makings of great leadership and how much larger cruise ships could actually get, and they can get bigger. It will air on Yahoo Finance, YouTube, Apple, Amazon, and Spotify. Julie Hyman will be right back on Market Catalyst.